Good morning, traders and investors. Roger Scott here, still the senior strategist at the Trading Pub. It's Friday. It's November 3rd. It's about 7:56 in the morning, getting a little bit of a late start today, but I'm sure I'll have this video for you before 8:30, which is when a big report comes out. We've got the employment situation today. On top of the employment situation, we had earnings from Apple. Now, I sent you guys a note last night on my Telegram channel. And by the way, if you haven't subscribed to my Telegram channel, you're being foolish. Go to rogerscott.com/Telegram. I've been sending you guys free trades, trading tips, price levels, what to stay away from, and all that other good stuff. You really want to subscribe to my Telegram channel. If you can't find the link, it's below the YouTube video. If you don't know where the YouTube video is, go to YouTube and then go to roger-scott.com/ and that's it, and you'll see on the bottom of my videos. But if you're looking for Telegram, go to rogerscott.com/Telegram. And if you want to reach out to me, please feel free to do so. Roger Scott Roger at rogerscott.com. Even I get confused. Okay, so I sent you a little note yesterday right before the market closed, and I said, look, folks, you got to be really careful around here. Now, why did I say that? Well, for two reasons. Apple earnings are coming out. They came out a little better than expected. What did all the FANG stocks do? All the FANG stocks do after earnings came out. Did they rally hard? They went down. They didn't rally at all. Every one of them, Netflix, and now looking at them, the Apple stock is down at 173, which is below the 50-day moving average. It's down here. Apple is the largest company in the world, and right now, as a result of this, futures are down, and Dow is up only 12 points. Now, things can go one of two ways. If the job report, if the employment report is really positive, it can spruce up some upside, but if it's not, we could see a nasty down day. Now, why is this important? Well, let me explain. Yesterday, I was looking at all the different, let me just go here. Yesterday, I was looking at all the different FANG stocks, right? I was looking at NVIDIA. And when I looked at NVIDIA, I'm seeing, it's still trading below the 50-day moving average and the 100-day moving average. I looked at, and it's down today. I looked at Google. Google is trading below the 100-day moving average too. Then I looked at Microsoft. Well, Microsoft is doing good, but Microsoft isn't exactly breaking out to new highs right here, and volume wasn't all that great. I looked at Tesla. And I even send you a note saying, hey guys, Tesla's trading below the 200-day moving average. It's abutting the 200-day moving average, and it's easy to get suckered in right here at these levels. But I would be very careful when I'm seeing stocks trade below the 200-day moving average. So my question to you is this. If every time the FANG stocks, and FANG stocks are responsible for about, 40% of market cap, if FANG stocks are not doing well, what's gonna spruce up this market really heavily? See, that's a big problem. So if you look at the QQQ right now, which is down, you will see it's below the 100-day and it's below the 50-day moving average. That's the 50-day moving average, and we have a down slope here. Look. So here, I'll pull the other side of that channel too here. You could see it right there. See the red and the red? That's a down slope, and we're almost up to that level. So I would be really careful with the FANG technology stocks, and I send you an alert yesterday explaining exactly what I'm saying right now. It's a little more visualized right now, but that was my reason to say, hey guys, heads up, be careful around here with tech, with the FANG stocks, because Apple's coming out tomorrow, and if Apple's coming out tomorrow, and if it's down, let's see what NVIDIA is doing right now. It's down. What's Tesla doing right now? Let's see. It's down. What's Google doing now? Slightly up, a hair. But the point is, if Apple is going to have a crappy day today, it is going to push the rest of the tech with it. Now, I don't know if that's going to be the case, but we got to be really careful. Really careful. Now, looking at the S&P, it's just easier to explain this on a video. Now, look at the S&P. Remember we came to the bottom of this channel? Well, guess where we're at right now? We're back to the top of that channel, and we're still below the 50-day moving average. So if this channel continues to hold, and I drew this channel a long time ago, and this is what we hit last Friday afternoon, right here. We closed right there. And I told you, I even send you a Telegram alert saying, hey, we're at the bottom of this channel, and now we're looking like we're abutting the top of this channel. We're still below the major averages. We can just come right back down. We can go a little bit higher, hit this channel right there, like we did right there on this bar. See that? A little whoop, and then comes right back down, and then we can come right back down, and we'll still stay within this channel. So you have to be very, 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 I'll say it again, careful of this price action in light of the backdrop that we're seeing right now in the economy. Now, I don't expect you to figure this out. I've been doing this almost 30 years. But you got to look at the big picture. You can't just look at it like this. You got to step out and look at the big picture and see what's going on. So we've got two hurdles today. We've got the employment report and we've got Apple. Apple already dropped. So now we have only one. But Apple so far is not looking all that bullish. Now, sectors have been rocking and rolling. But look at the sectors that are not just coming up from a bottom like most of these are. Look at home builders. So let me tell you which ones are looking pretty good. Remember what I said beginning of this week, end of last week? The two sectors that I'm liking are consumer staples and utilities. Look at these. Up, 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 above the high, above the previous trend on both. What's most importantly, the lows are getting higher. You see the lows are getting higher? Lows are not getting higher here. Lows are holding up pretty good with retail. I like this. Lows are holding up really good with energies. Lows are not holding up with financial. We made lower lows. Lower lows on the Dow. Lower lows on real estate. Lower lows on the mid cap. Lower lows on the S&P 500, that channel we just discussed. Lower lows on material sector. Technology lower lows. Lower lows, lower lows, lower lows, lower lows, lower lows, lower lows, lower lows. So the only sectors that aren't showing lower lows are utilities, consumer staples, retail, actually, believe it or not, but it has to go through this hump. So question mark on utilities and energy. I like this. And remember what I always said, as long as this war continues, you're going to have heightened energy because there's just so much sensitivity and unknown. Markets thrive in the unknown because there's speculation. So right now, I like consumer staples. I like utilities. I like energies. I actually like energies a lot. This is a big move yesterday. And I'm starting to like retail a little bit, but I want to see us above that channel. I want to see the S&P break above the 50-day and the 100-day moving average. Till we break above the 100-day moving average, nothing is good's going to happen. So in case you're wondering why I'm still having short exposure in a lot of programs, is because these 3-4 days aren't going to make me bullish. What this is short covering ahead of today's report. And if today's report is no good, it's going to be, you guys know what I call it, a bear trap, or excuse me, a bull trap, So be very, very careful. Yes, we're above the 200-day moving average, but we're still below the 50 and the 100. And we have a while to go here. But if we do break out hard, and start clipping past the 100, that's when I'm going to start getting bullish on the FANG stocks. All right, so I wanted to explain that to you. I'm sorry for taking so long, but you need to understand that, okay? You need to understand the backdrop and what we're dealing with. It's not about being bullish or being bearish. It's explaining why I'm bullish and why I'm bearish and connecting all the dots. So December Nasdaq futures are down. You know why? Because of Apple. Weak sales forecast for the holiday quarter for Apple. And what did all the other FANG stocks do after they reported better than expected earnings? They went down because the expectations, futures expectations, were not as good. We're going to have weaker sales in the future. Our ad revenue is going to be lower because the economy is not strong right now. So Apple fell 3% in pre-market. The most valuable tech company reported better than expected results, but warned that revenue in the holiday quarter will be about the same as last year. That's horrible. That's bad. That's basically telling us they're flatlining. Markets and stocks always grow on the future, not what already happened. Nasdaq is at a 2-week high. Be very, very careful. Be very, very careful. Labor Department reported on Thursdays that unemployment rose 5,000. This number has been really good. It's been around the low 200,000s. There is almost a 20% chance that the Fed is going to raise rates in December. I think they're going to raise rates in January, maybe even February. They don't need to do anything. The bond market's doing all the work for them. Today, all eyes are focused on the non-farm payroll. Economists on average, they believe it'll come out at 180,000 compared to 336,000. I mean, talk about numbers. We also have the non-manufacturing PMI. We have the global service PMI. All of these the Fed look at. Europe, it's up a little bit, giving us a little tailwind. They are up because we're having the report and they think it's going to be bullish and they think we're near the end of the tightening cycle, which I think is true, but doesn't mean we can't hold rates steady for another year or two. That's what a lot of folks don't realize. Shanghai's giving us a little tailwind. Private sector survey revealed on Friday that China's service sector expanded at a slightly quicker pace in October, though sales saw their slowest growth in 10 months and employment remained stagnant. So it's one of those situations. We don't have big earnings today. We have Apple that we're going to be dealing with, and we're going to be dealing with the employment report. Just to show you what the expectations are baked in, look at how far we are all over the place. What I like to look at is the unemployment rate. That's what I like to look at, and it's supposed to hold steady. But look at the consensus. Prior 336, consensus 130 to 260. It's a wild, wild west, and nobody really knows what's going to happen. My suggestion to you is this. Keep your eye on the SPY. See this channel? Keep your eye on the SPY and keep your eye on these levels. If we break through this level, we can go higher. If we don't break through these levels, it can be pretty nasty. We can turn right back around and go back to the bottom of this channel like we did on Friday. We turned around, went up. Friday afternoon, we closed here. Monday, Tuesday, Wednesday, and Thursday. Tech stocks barely participated, and now we can come back off. Remember, we're still below the major averages. Looking at the QQQ, it's looking a little better, but again, it's still within this range. It's still up here. It has to go above this level. It has to go above the 100-day moving average. I guess the key here is both the SPY and the QQQ have to go above the 50 and the 100-day moving average, and we're just not there yet. Be very careful today. I'm not trying to be a bear. There's a lot of good stocks that are moving higher, but I would be very careful with FANG because of Apple and because of what I'm seeing with their price action not really committing right now to a strong range. Now, folks, to close out my birthday week and the meat of the earnings season, I mean, talk about yesterday. Wow. I'm going to go live one final time. Yes, one final time with a Pro Trader Dashboard session at 1 p.m. Eastern Time today. Not only will you get some free goodies from me, I don't know if I'm going to give you longs or shorts, just depending on what's going on, but I'll give you some trades, maybe even options if you behave yourself, completely free on the house. That's right. I don't know it's going to be long, short, because I have no idea what the market's going to do today. But so far, I've given you, I think, 10 trades this week. And guess what? They've all made money. Some very little, some a lot, some barely scratch, but none of them lost money. And that's huge, right? 10 trades, 10 for 10. I think maybe even more. But you'll also see how the private dashboard, Pro Trader Dashboard, can track institutional buying and selling literally as it happens. It's very, very cool. Click the link below and I'll see you at 1 p.m. We'll do a Q&A session. I'll give you some free goodies and I'll talk more market analysis. I can't wait to see you then. Have a great weekend. Remember, I have an open door virtual policy, roger@rogerscott.com. Don't be foolish. Subscribe to my Telegram channel, roger at rogerscott.com/Telegram. All instructions are there. Have a great weekend. Post below this video. I want to see your comments. And if you've been making money with me, let me know. Bye.